All right. Well, I'm thrilled to join you all today, and thank you to the CMMA for bringing DAYTA back to present. I first started working on this topic late last year, and at that point, we were right at the beginning of a recession, or maybe halfway into one, or kind of just around the corner from one. And today we're in about the same spot with a very unpredictable economy. You have some manufacturers who are doing reduction in force. You have some manufacturers who can't hire enough. Um, it's just an odd economic landscape right now. And that makes this presentation particularly relevant because what we're going to really talk about is being prepared for whatever comes next and the steps and homework and planning you should be doing internally so that you're ready and can evolve your marketing strategy as you need to. So for a disclaimer, no one can tell you exactly what your organization should do in a recession or economic downturn. This presentation is fueled by the themes found across many, many, many articles and studies that covered recessions from 2008 on backwards. But it's important to keep in mind, marketing has evolved a lot since 2008. Back in 2008, Google business profiles weren't a thing. We printed out MapQuest directions. There was no rerouting. You really hope that you follow your MapQuest directions correctly. Reviews were just gaining momentum. They weren't omnipresent yet. Amazon was kind of really the ambassador there of getting reviews on everything, but it wasn't to the point today where I can expect to go find thousands of reviews online for a $5 mascara. YouTube was about 3 years old, and Blu-ray had just won the high definition battle. So HD DVD was conquered. The iPhone was one. I'm not even sure it had an app store at that point, and everyone was convinced those tiny little flimsy netbooks were going to be the next big thing. And most notably, Elon Musk had not yet joined Twitter, let alone done horrible things to it. So all of this context is to say, we're very much in uncharted waters as we navigate our way to the next normal. Luckily, even in uncharted waters, north is still north. So today what we're going to be covering is the tried and true best practices that you need to keep in front of you as you plan for 2024 and beyond. And in our research, these 5 commandments were recurring indicators of brands and organizations who emerge from economic downturns in fighting shape. In our recent experience, these fundamentals were also what really mattered in the 2020 recession as well, where there was this little blip of economic downturn. Customers of ours that had these steps underway and had this mentality in place did well during that downturn and coming out of it. So we'll jump right in with know thyself. So our first commandment is a philosophical staple going all the way back to the ancient Greeks. And this is one that you need to take to an internal strategic level and be very objective about what you call an advantage and where you might have a vulnerability. And when we're talking about advantages and vulnerabilities, we're not talking marketing specific. For example, if you're Apple, your brand is definitely a plus, but possibly a more unfair advantage is that you've socked away more money than most small countries. That's a really great way to go into a recession. It's hard to catch up with that one on short notice. As another example, great customer service could be an advantage if you can back it out to more than we have really good employees who care about our customers. Do you have systems and technology in place that make you more responsive, faster? Do you have robust training in place that ensures every employee that answers the phone or talks to a customer does it in the right way with the same phrasing and helps customers and builds brand along the way? Or is your customer service kind of this surface level thing where your competitor could geofence your location, hire away your employees, and fully take away that advantage because really what you're relying on is institutional knowledge and good attitudes? So what we're looking for are things that are hard to copy that might give you an advantage against the competition. And these unfair advantages are what we want to reinforce and weaponize. For vulnerabilities, it's the reverse. It's thinking about what could be weaponized against you. And often these are the flip side of an advantage. So if customer service is a large part of your budget, a competitor might be able to attack with a lower cost, lower touch self-service model that might provide overall value that's lesser, but could be a better fit for tight wallets in a recession. And then the final thing to keep in mind is, how do your customers know you today? Because the last thing you want to do in a recession is cut away the things that really matter to your existing customers. And we'll talk about that a bit further on. Here's just some additional examples of advantages, vulnerabilities, and how the target audience might perceive them. So the takeaway here is be aware of those vulnerabilities. That doesn't mean you necessarily fix them. The vulnerability sometimes is the cost of the advantage. And it's something that marketing and operations have to be aware of and then help reframe or support. So if you're the high quality premium provider, you don't want to start skimping on quality. You want to use marketing to tell that story, and you want to use your operations to be as efficient as possible without compromising that quality. And so if you're going through an exercise like this internally, the goal is really to get everyone on the same page here about your positioning and how you're going to strategically support or shift, if it's necessary, that position without alienating or ruining your customer's point of view. And this is important because when times get tight financially, leadership can start flailing, and you can say, hey, look, our labor costs are really high. Maybe we should cut there. Well, okay. But if those labor costs are critical to the customer service that we're known for, that's maybe not the best area to start chopping. Similarly, we're more expensive than our competitors because they don't use the same quality of materials. We might not want to go out and cheapen our material quality because that ruins our brand reputation that we've built. So it's about really having everyone on the same page and being conscious of, yes, these are our vulnerabilities. How can we counter or protect those in other ways, knowing that they're what we have to have to achieve the advantage that we're bringing to the market. So that's knowing thyself. But this work of knowing thyself really only gets you so far. Marketing's a competitive sport. If we didn't have competition, we wouldn't need marketers. So now we need to zoom out a little, and we need to understand the landscape that we're playing in. And this can look very differently for different manufacturers. So if you're a complex organization with a lot of verticals that you're playing in and a lot of product lines in those verticals, you're playing across several landscapes at the same time, and you do need to consider all of them. You might see some areas where you think market demand is going to trickle to nothing, and some areas where it's consistent, and some areas where it booms. And a challenge we often see here with organizations that look like this is that in a lot of cases, your organization grew pretty organically, kind of based on, well, I had customer X, they were buying Y from me. They asked if we could do Z. We figured out how to do Z for them. They referred us customer A, who also wanted us to do Z for them. And then that customer asked if we could do customer Y, if we could do thing Y. And it just keeps building on itself, so on and so forth. And you grow organically, but you find yourself playing in so many different arenas that you're spread too thin to really be differentiated or focused in those arenas. So even doing this kind of exercise becomes really difficult, and getting consensus on prioritization becomes really tough. That doesn't mean it's not necessary. It's even more critical for these larger organizations who've kind of branched out and branched out and branched out to really be intentional about taking a step back and saying, okay, where do we want to focus? What really matters to our revenue, our bottom line, and our vision for the future? On the other hand, on kind of the other extreme, if you're a more focused organization with really only one arena you're playing in, or in a really extreme case, maybe only really one big main customer who keeps the lights on, that's even a scarier place to be, because if that customer leaves or that market flops, you're in for a very tight time. And when you lay out this landscape, you might see that you need to diversify and find a few different baskets to put eggs in. So that's an important place to start. There is the kind of flip side of that customer landscape, which is your supply side. And we saw that especially when COVID hit. But it's not just, will the supply side be there? Will my supply chain hopefully be rugged? It's also about, are there going to be opportunities there? Are there going to be cost shifts that I need to anticipate? Is there something, where people are going to go out of business and I could stock up on inventory for? Is there going to be advantages we can take there? So you want to understand what's that broad landscape that you're playing in. And then you do want to start examining your competition. And ideally, you'll kind of frame up your competition the same way you just did yourself. You'll try to look at advantages, vulnerabilities, and then how the market perceives them. And you want to kind of see like who has the scale advantages when it comes to bargaining power and internal cost cutting, who's going to be able to get a better deal than us just because they're bigger. Maybe alongside that, who's running on legacy systems that's going to make capturing any operational efficiencies really costly because, I don't know, maybe their ERP is 30 years old and we know that. And then finally, you do want to have an eye on the fringe cases, the little weirdos that are kind of edging in on the market that might seem silly right now. That's often where we see industry disrupting innovation come from. So map out the landscape, look at your close competitors, and have an idea of what's starting to happen maybe on the fringes of that landscape as well. And your goal with this is to end up making some hypotheses about how you think everything might play out and what your response to that could be. This isn't the sort of planning that you're going to go into with a pen and say, we will do this, we will do this. But by doing this exercise, thinking about it and talking about it as a team, you're going to be better prepared to react quickly because you will have thought about it. It's that old Army adage of the plan is worthless, the planning is priceless. We do want to have this big picture in our head. And again, have everyone on the same page about where our priorities are. So both of those, understanding your brand positioning, who you are as a company, and understanding the landscape that you're going to be playing in and how you think that might shift, these are prerequisites before we do anything with our marketing spend, because otherwise we are just flailing. We are not making informed decisions. So in an economic downturn, if your customers are going to buy less, you should definitely be proactive about tweaking that promotional mix. But if you cut, you want to go in with a scalpel, not just hack away with a hatchet. And so we'll start with some definitions today. So brand marketing is that broad, top of funnel, brand defining marketing that's meant to establish awareness and trust with your target market. And I always think of those Budweiser Super Bowl commercials. They aren't telling you to go buy our beer. Instead, they're trying to link their product with concepts and these heartwarming stories of Labradors and Clydesdales working together to push wagons. Brand marketing is this long game. It's hard to measure, but it's critical to sustain for the health of your organization. And I would put like thought leadership content development, sponsorships, media placement, stuff like that all goes into this bucket. It doesn't get someone to pick up the phone, but it establishes and reinforces your positioning. And when your customer base does have a need, they're likely to have a bias for your solution. You're going to be on their short list. They're going to have some level of trust there. That's what makes it longer term, is it's a relationship builder over years, maybe decades before someone's ready to buy. And by contrast, we have direct marketing, which is end of funnel, call to action heavy marketing that's really meant to drive sales in the short term. It's usually specific to a product or a service line. It's usually a lot easier to measure ROI on, and it's much shorter term in impact. So an end of quarter promotion, a newsletter pushing a specific product line to a customer segment, or a search ad on Google. These are all examples of direct marketing that you might have in play. And then there's a third category that I'm going to add today that we don't tend to talk a lot about, and I don't think you'll find it in any marketing textbooks, but digital presence marketing is not even advertising. It's all those little marketing things that have slowly accumulated over the past 10 years. It's reviews, it's social profiles, it's mentions, it's search engine optimization, etc. All these things that are a factor and are there and impact your brand, whether or not you want them. So you could remove your Facebook page, but it can be regenerated tomorrow without your permission just by someone checking in. You could try to remove your Google listing because you decide, hey, I don't want to manage that anymore. But if you're going to do that, you probably need to raise your building down to the ground as well, because Google will regenerate that. So for better or worse, over the last decade, marketing has really come to include managing all these little digital presence pieces. And so given those three kind of chunks, how do we optimize everything? So first, you need to be flexible and fast on your feet. You want to plan ahead with those hypotheses, but you also need to set yourself up so that you have the ability to react quickly. And this is where that prep work of knowing thyself and mapping thy market pays off. So if your competitors are going to generally reduce their advertising and marketing spend, you may actually counterintuitively want to crank up your brand marketing, because that will enable you to take advantage of lower cost per click because there's less demand, and reduced competition because, again, there's less demand. to capture share of voice out in the market and eventually share of market itself. So in both the B2B and the B2C world with customers, we generally see a surge of repressed demand post-recession. And you can see that, in how travel exploded post-COVID. Nobody could travel for a year and a half, 2 years. Travel was booming the instant everyone could get back to it. The desire to travel didn't end. People were accumulating ideas. They were getting exposed to brands while they couldn't, and then demand exploded. So you want to retain brand awareness marketing so you are top of mind when they're ready to buy. The need that you solve isn't going anywhere, but it is getting delayed. On the other hand, for direct marketing, you'll want to really be on top of how your customers are responding. And this is why that mapping out and understanding the landscapes you're playing in is so critical. If customers in a segment are just not buying, if they're sitting on their hands and holding off on a purchase, you're going to want to reduce your direct marketing while staying consistent with the brand marketing. If you have a diverse product or service line, like I said, this decision is made at each of those line points. And it's really about watching for those leading indicators that show that buying behavior is slowing. So that might look like deals get paused and they don't go further. It might look like, we have initial interest in conversations, but no one's willing to say that they have this in their strategic plans to make this kind of purchase. And so that tells you, okay, I need to not run the end of quarter deals. That's not going to help me anyway. But I do need to keep this sponsorship going because those people will have a need eventually. So it's a balancing act between those two levers. When it comes to that digital presence marketing, at some level, it's pretty much mandatory that you continue doing that work. You can optimize it a little bit for costs, but it's not like media spend with brand marketing where the cost fluctuates based on demand. With digital presence marketing, it's either labor and software or it's just labor. So let's say for review management, you're using something like Podium to ask customers for reviews and responding and monitoring to them. You could cut out that Podium cost of $100 per month, but you still have to then do the labor. So it's always this trade-off. And you want to put yourself in a good position to cut or grow in real time. So when it comes to all three of these buckets, you need to understand where you're at today. Where are you spending money? And what do those contracts look like? Are they flexible? Are you tied in for a year? What's the breakdown of those budgets between brand and direct? If you're working with an agency or an outsourcer, they may have it split out that way, or it may be kind of hard to tell. And you might need to dig in and understand what is the goal of each of these campaigns we're running? What are my expected results? And then you want to understand what can I turn up and down? And what's actually kind of a non-negotiable, like my website hosting. Like I could take my website hosting from $60 a month to $30 a month. Is that even worth the effort of actually migrating the thing? So you really want to understand where that money is flowing today so that you can adjust it as you need to strategically. And so here on the right here, I have an example of one of our customers, Spectrum Aeromed. So in a recession, they're probably going to see fewer sales of new equipment. So rotor wing, fixed wing, and specialty equipment. Those might take a little bit of a dive because people likely are not going to be buying new helicopters and retrofitting them. They are more likely to be making their existing helicopter equipment last longer. So they'll see decreased sales for new equipment, decreased demand there, but likely increased demand for maintenance. So what does that mean for their marketing mix? It means their direct spend should shift to promoting that maintenance, and they should go after current customers especially. It means they should keep up brand marketing to stay top of mind with existing customers and prospective customers so that when there is that post-recession demand bounce back, they're really ready to capitalize on it, and they've gotten to the top of the short list for those people. But they definitely will have some shifting to do as economic winds change. There is another side to optimizing your marketing spend as well that's especially critical. So customer retention and referrals should always be a dominant player in your marketing strategy, but it's especially critical when it's an economic downturn. It costs less to retain a customer than it does to acquire new customers, and the revenue generated from returning customers tends to grow over time. And more money in for equal or less money out is usually what we aim for as business people. It's kind of our goal. And that's really the key. More money in than out. You want to retain profitable customers, not necessarily all your customers. And you really want to ensure that you've got your ideal customer profile or profiles well defined and prioritized. And you want to look at, again, those customers in their industries, how they're going to be impacted and react to this economic downturn. If you are in one of those kind of organically grown, complex, multi-limbed, we do it all companies, this is especially critical because you are going to need to prioritize your resources and focus a bit. So really understanding which customers are most important to our long-term success and how do we retain and keep those customers happy is especially critical. And understanding how your customer is going to respond in a downturn will help you cater your marketing and offerings to retain them. So that could mean a simple thing as a change in messaging to reflect a change in their optimism or in their stress levels. It could, if there's no brand damage involved, it could involve a slimmed down, lower tier product offering that fits maybe a budget need and maybe something that they can grow into when economic times are less tight. You could offer a lower scale entry point that they can upgrade as they grow with you as an account. What you don't want to do is suddenly abandon your current customers with an abrupt shift in your offering or an abrupt shift in your messaging, even if you think it could open up a new lucrative marketing segment. You want to hold on to that bird you've got in your hand. That's much more valuable to you. And kind of a final note on here, retention goes beyond marketing spend and into company strategy. Operationally, you have to be living up to the promises your marketing makes. And that could mean strategically investing in processes, equipment, or people. But the last thing you can have happen is that marketing and sales is saying one thing and operations is delivering something else. Your brand cannot recover from that kind of dissonance. So here's kind of the big thing to keep in mind as you're going into this planning and thinking about, what do I do with my marketing in an economic recession? So economic downturns panic businesses and stock markets and politicians, but you can't lose track of the long term. You do need to adapt to short-term reality, but it's a balancing act. It's not a long-term prescription. And so Harvard Business Review identifies 6 total approaches. Most organizations have some combination of these in play, ranging from totally defensive, cut everything we can, hunker down, total offense, bare minimum type deal, to completely the other end of the scale where we just ignore facts and we keep spending like there's no tomorrow. Neither of those ends of the spectrum are an ideal place to be. The ideal position is to balance operational efficiency with opportunistic, strategic market development and asset investment. So the efficiencies gained in operations become sustained advantages throughout the upswing, while market development and asset investment opens up new opportunities both now and in the future. So let's say we develop new processes because it cuts our labor cost. That efficiency lasts into the future. Our labor costs are permanently lower. Our margin is permanently higher. Let's say we invest in new equipment that lets us gain more business from an existing customer segment and opens a new market that also lasts into the future. Not only do we have that additional revenue from those existing customer base, we've opened up a new market that we can continue to grow in and see sustained growth well into the future. So kind of the critical thing to keep in mind, and this is how BI Business Review put it, an economic downturn presents equally as much a business opportunity as it does a threat. So you want to develop your agility now. You want to listen to and you want to hold tight to your customers, and you want to look for opportunities. It's possible to come out of an economic downturn stronger than you went into it. And that should be your guiding North Star as you're making these marketing decisions. So to wrap up today, here are those 5 commandments once more. You got to know yourself and get everyone on the same page about your positioning, which is a result of your advantages and the vulnerabilities that pay for those advantages. You've got to map your market so that you can prioritize market segments, and you need to understand what your competition is likely to do and have some hypotheses around that. Once that's done, you're able to really optimize your marketing spend faster and more effectively, and you're going to avoid cutting away at the things that really matter long term. You need to have a focus on retaining your customers and a focus on meeting their needs, because they are going to be who sticks with you and helps you get out of this. And finally, you need to be ready for the upswing, and you need to keep the flip side in focus as you're making these decisions. You will likely need to cut costs and shift budget, but by doing this planning and strategy work as early as possible and on a semi-ongoing basis, you're going to make the right decisions that empower your brand to be stronger in the long run. So if you want to take these steps but need help on strategy or execution, that is why DAYTA exists, to support organizations just like yours. We'd love to talk. But thank you, and I'll open this up to questions now.
Thank you, Erin. Does anybody have any questions? Feel free, you can put them in the chat. I didn't see any come through during the presentation, or you could unmute yourself as well if you have a question.
I guess I have a question. Has anyone already done planning work of this type that they'd like to share with the group?
We have a quiet group today. Well, I'm not seeing anything come through on the chat.
Again, if people have follow-up questions after they've had time to digest this or go back to their team and talk about it, more than happy to talk as well then.
Yes, and like I mentioned, we were recording the session today, so I will send a link out with this presentation to everybody that registered. And for those still on, just a reminder that we do offer our marketing webinars on the third Wednesday of each month, and we look forward to seeing you again. So thank you so much, Erin, for your presentation today. And I will let you know if anyone reaches out to me with questions they might have for you as well.
All right. Thank you so much, everyone. Have a great lunch.
Have a great day.
Bye.